Welcome to the Deep Dive, brought to you today by BLK Crypto.
Great to be here.
So today we're really going to dig into the crypto space. We've got a whole bunch of recent stuff, articles, YouTube takes, Reddit threads you've shared.
Yeah, a lot going on.
And our goal here is basically to sift through it all, pull out the key insights, maybe spot some opportunities, but also tackle those, tricky questions around regulation and ethics.
Exactly.
Yeah.
It's quite a mix. We'll be looking at some, frankly, staggering Bitcoin ETF inflow numbers.
Oh, yeah?
Plus, the whole meme coin saga continues, especially around the Trump token. And then there's the regulatory side, new SEC chair, what that means, delays, and just general market mood, price predictions, that sort of thing.
Okay, quite a bit to unpack then. Let's start with those Bitcoin ETFs. You mentioned inflows. There was one day, April 22nd, 2025, that got called a significant deviation. What happened?
Well, significant might be putting it mildly. We saw $912 million flow into Bitcoin ETFs.
900 million in one day.
In one single day. And just to give that some context, one source mentioned that's over 500 times the daily average we'd seen in 2025 up to that point.
Wow.
Yeah, the average was apparently something like 23 Bitcoin a day, about $2.1 million. So, a huge leap.
That's incredible. And wasn't that the biggest daily inflow since way back in November 2024?
It was. At about 11 and a half times the daily average since these things even launched back in January 24.
Okay, so massive spike. And this came just as Bitcoin's price was climbing to like a 6-week high.
Precisely. Which really highlights how closely tied these ETF flows are now to Bitcoin's actual price action.
Yeah.
But maybe more importantly, there's this growing idea, this argument that the ETFs has basically become the marginal buyer for Bitcoin since they launched.
The marginal buyer, okay, what does that mean exactly in like simple terms?
Think of it like this.
Yeah.
The marginal buyer is the one making the last big purchase that actually pushes the price up. So the argument is the ETF buying is now so consistently large, it's often the thing that, determines where the price goes on the spot exchanges. It suggests a real shift in who's driving the market.
Interesting. So, institutional flows are really in the driver's seat now.
It points that way.
Yeah.
But, you have to wonder, does that create a new kind of risk if those flows suddenly reverse?
That's a fair question. I also remember seeing something from Bloomberg's Eric Balchunas. He called it Pac-Man mode.
Yeah.
Saying the inflows were picking up across almost all the ETFs, not just the big ones like BlackRock's.
That's right, and that's a really key observation. It wasn't just concentrated. It suggests pretty broad demand, a wider institutional appetite maybe for getting Bitcoin exposure via these regulated products.
Okay.
And if you connect that back to some of the price prediction stuff we looked at, this kind of renewed, widespread institutional buying,
yeah.
Well, it could be a sign that maybe that bearish phase people were worried about is actually over.
So institutions seem to be piling back in, at least for Bitcoin. Okay, let's widen the lens a bit. What about the overall market feeling? One source, Finance Flow, mentioned Bitcoin pushing past $84,000. Total market cap over $2.69 trillion. Sounds pretty positive.
It does sound good on the surface, yeah. Definitely a feeling of renewed optimism in the price. But that same analysis pointed out something a bit weird.
Oh.
A big drop, like over 26% in trading volume, even while prices were going up.
Wait, less trading but higher prices. How does that work? Seems kind of backward.
It does seem counterintuitive. The explanation offered was, well, maybe there's still quite a bit of fear or uncertainty lingering. People remember the crashes, right? So maybe they're hesitant, waiting for a dip. But the take in that video was actually that this caution could be a buying opportunity. The smart money moving in while others hesitate.
Ah, okay. So fear creates opportunity for some.
Potentially, yeah. It's definitely a strange dynamic, that price-volume divergence. Makes you wonder about historical parallels, doesn't it?
It does. That source also flagged a few specific coins doing interesting things. Core, Jasmy, Trump, Tau, Hype. Said it was down to community buzz and real-world use cases starting to emerge.
Right. And then there was the whole Trump token thing, unlocking, 40 million tokens? Worth over $320 million?
Yeah, that seemed like a big move.
Definitely. The piece framed it as a strategy, basically, to grab attention and pull in new investors.
Risky, though. Flooding the market like that. Couldn't it dilute the price?
You'd certainly think that's a risk, yeah. It's a bold play, putting that much supply out there at once.
Okay. Shifting gears slightly, over on Reddit, people were talking about Bitcoin flipping silver in market cap.
Yep, saw that too.
Yeah.
And hitting 63% market dominance.
Right. Highest since early 2021, apparently.
It really does underscore Bitcoin's strength right now, doesn't it? It's clearly leading the charge.
Absolutely. And the price prediction article we saw seemed to back that up, mentioned Bitcoin hitting 94 tailors, then 95K.
With increasing odds of reaching $100,000. Yeah. Citing those bullish catalysts, like the ETF flows, and also, interestingly, increased spot trading volumes more recently.
And it wasn't just ETFs, right? There was mention of institutions buying Bitcoin directly in April.
Exactly. That prediction piece cited a Coinbase institutional report. Said institutions were buying BTC partly as a hedge.
Against inflation. Macro stuff.
Yeah, against currency inflation, general macro uncertainty. Kind of treating it a bit like digital gold, you know?
Makes sense. So lots of bullish signals.
Mostly, yeah.
Yeah.
But it's important to keep perspective. The crypto fear and greed index actually dipped a bit.
Oh, really? Even with prices rising?
Yeah, it slipped from 72, which is pretty greedy, down to 60. Still greed, but less extreme.
Suggesting maybe some underlying caution still.
Could be. And that same price prediction article did mention some analysts expecting a pullback, maybe to around the $87,000 level, so it's not like everyone thinks it's only going up from here.
Right. Always different views, healthy reminder about volatility.
Definitely. And, you know, that article also briefly ran through predictions for other big coins, ETH, XRP, BNB, Solana, Doge, Cardano, SUI, Link, AVAX, looking at their key support and resistance levels, bullish cases, bearish cases, standard technical analysis stuff traders watch.
Okay, good overview. Now let's talk regulation, always a big one. Crypto Wendio's video mentioned the SEC delaying decisions on some ETFs. Polkadot, Hedera.
Yeah, those got pushed to June 11th.
Yeah.
And the Bitwise, Bitcoin, and Ethereum ETF decision, that got delayed to June 10th.
Delays usually sound bad, but the take was different here.
It was actually. The argument was, look, maybe this is a negative. It gives the new SEC chair time to actually get settled and maybe establish some proper frameworks before just approving or denying things.
Ah, the new chair, Paul Atkins, right.
Right.
And he's seen as being pretty crypto-friendly, or at least Bitcoin-friendly.
That's the general consensus, yeah. Pro-crypto and pro-Bitcoin was the phrase used.
Yeah.
The article specifically about him highlighted how he's publicly criticized the SEC's past approach. Basically saying they needed clearer rules, you know, that the uncertainty was actually harming innovation, not helping. He seems to want proper guidelines.
That could be a significant shift at the top. And didn't we also see something about state regulators kind of pausing enforcement?
We did. The weekly crypto recap mentioned that apparently state regulators are holding off a bit, waiting for the SEC's crypto task force to give some clear guidance to Congress first.
Okay, so maybe a less fragmented approach coming. That could be good for the industry.
Potentially. But on the flip side, that same recap had some sobering news about crypto crime.
Right, the FBI report.
Yeah. Unfortunately, it seems crypto-related crime is on the rise, and elderly Americans are being hit particularly hard, losing over, what, $3 billion in 2024 alone?
Oof. That's awful. A stark reminder of the risks still out there.
Absolutely. And it ties back to regulation. The recap also mentioned an SEC crypto roundtable, where Chairman Atkins himself called for updated rules for blockchain. He criticized the old rules as outdated and basically warned that sticking with them stifles U.S. innovation.
So he's pushing for change from within.
Seems like it. And interestingly, at that same event, Commissioners Pierce and Uyeda apparently argued that most crypto assets aren't actually securities.
Whoa, okay. That's a pretty big statement from SEC commissioners. Could change a lot if that view prevails.
Huge implications, yeah. It challenges a lot of the SEC's previous stance.
Okay, wow. A lot happening on the regulatory front. Let's quickly touch on some of the other bits and pieces we saw. Any other notable developments?
Yeah, a few things. Canary Capital apparently exploring some kind of Tron-backed financial product.
TRX, okay.
Coinbase's chief legal officer, Paul Grewal, was publicly pushing the SEC to release documents about their Ethereum 2.0 investigation. Still some friction there, clearly. CME Group, the big Chicago exchange, announced they're launching XRP futures, scheduled for May 19th. That's a pretty significant institutional product for XRP.
Yeah, definitely.
Strike announced they're getting into Bitcoin lending.
More utility for Bitcoin.
It's exactly. We already mentioned Bitcoin hitting that 63% market dominance again. MicroStrategy's massive Bitcoin treasury reportedly sitting on $5.1 billion in gains.
Not bad.
Not bad at all. On the darker side, reports about North Korean hackers using U.S. shell companies to target crypto devs.
Yikes. Constant threat.
always.
Oh, yeah.
And Dave Portnoy had a typically blunt take, calling meme coins legalized Ponzi schemes.
Huh. Okay. Never shy with his opinions.
Never. And finally, just looking at what people are actually clicking on, CoinMarketCap's most viewed list had the usual suspects like Bitcoin, XRP, Ethereum, Solana, but also Trump in the top 10. Shows where some of the attention is anyway.
Right, and that actually brings up an ethical point we need to touch on carefully. The Trump token.
Yes.
There was discussion around whether it's, well, ethical for a U.S. president to be associated with or seem to promote a meme coin named after them, especially that dinner with top holders.
Right, and one of the Reddit threads mentions Senator Ossoff calling that dinner potentially an impeachable offense.
Okay, so strong words there. We're just reporting what was said in the sources, of course, not taking sides, but it definitely highlights the unusual intersection of politics and meme coins right now.
Absolutely. It's a really contentious issue, and the sources reflected those different viewpoints.
Okay, so let's try and wrap this up. If we boil down this deep dive, what are the main takeaways?
Well, first, you've got this really significant surge in institutional money flowing into Bitcoin ETFs. That feels like a potentially big shift, maybe signaling the end of a bearish phase, at least for Bitcoin.
Okay, but still some caution.
Definitely. While the overall market prices look pretty good, that drop in trading volume suggests people aren't universally convinced yet. There's still some fear or hesitation out there.
Got it. And regulation.
It's really in flux. You've got a new SEC chair, Atkins, who sounds like he wants clearer, maybe more innovation-friendly rules, but actual decisions, like on altcoin ETFs, are still getting delayed. So progress, maybe, but slow.
And the ethical questions around things like the Trump coin aren't going away.
Not at all. That whole intersection of high-profile figures, politics, and these highly speculative assets is still very much being debated.
So for you listening, why does all this matter?
Well, these trends directly shape the landscape you're navigating. That institutional money could boost prices further, sure.
Yeah.
But the regulatory uncertainty is a risk you absolutely need to factor in. And these ethical debates, they could influence future regulation or just public perception.
Right. Lots to keep an eye on. Which brings us to our final thought for you to consider.
Okay.
We're seeing huge amounts of institutional cash pouring into Bitcoin ETFs, right? But at the same time, decisions on ETFs for other cryptos are being delayed. So what does this concentration of big money mainly on Bitcoin mean for the future? Does it help or hinder diversification and access to the broader crypto market for individual investors like you?
That's a really interesting question to chew on. Where does the focus on Bitcoin leave everything else in this new institutional era?
Something to ponder. This has been The Deep Dive.
Thanks for tuning in.
And a reminder that this deep dive was sponsored by BLK Crypto.